Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today, we're going to take a look at how consumers are buying cannabis. Things are changing every day. We're also going to take a look at how it's changing American shopping habits in general. So these slides are from a webinar that Headset did with Nielsen, the rating agency. This first slide talks about how many consumers there were before this whole thing went down versus afterwards. And so with THC had about 43 million before and 61 million after. CBD had 19 million before and 72 million. And then hemp-derived CBD, it goes from 41 million to 80 million. Obviously, a lot more people consuming right now for whatever reason, either they're home. We have seen shifts away from topicals and more towards edibles. So either people aren't working or they want something that's going to work really, really well. Looking at the user growth with THC-dominant cannabis, 1.4% growth. CBD is almost 4x. And then hemp-derived CBD is almost at a 200% increase. So hemp-derived CBD is not going to be at a food and drug mass merchant and warehouse club. You're more likely to see it at a CBD specific source, followed by a specialty retailer online. But in terms of your warehouse stores, the Costco's, the grocery stores, the food and drug and mass consumer warehouse clubs, that's only 16%. So people right now during this time of uncertainty, they're looking at CBD and THC products for pain and holistic health and habit breaking, but they're only using THC to experience enhancement and socialization. Here are 5 reasons why people use cannabis, according to Headset and Nielsen. For THC, people are using it for relaxation, mood enhancement, sleep, mental health, and enhancement at home experiences. CBD, they're using it for sleep and relaxation. And then the top reason for hemp-derived CBD is for sleep. Adult use cannabis sales are a multi-billion-dollar industry across the U.S. and currently annualized to nearly $2 billion annual in Canada. Colorado has $1.4 billion in sales. Nevada has $640 million. Washington has $1.1 billion. And California at $2.8 billion in sales. So the beginning of 2020 showed strong sales growths. A lot of people weren't sure if cannabis was going to be deemed essential businesses, and they also had jobs. A lot of people have been working from home and or laid off, reduced hours, all kinds of issues, huge unemployment numbers at 40 million people. It's just unprecedented. And so there's less disposable income. You're not going to be spending as much. Cannabis being part of a, quote, vice stock, gambling, alcohol, defensive stocks, and cannabis now, all in that sort of recession-proof area. We're going to see continued sales, but instead of top shelf, people are going to be buying, something that's less expensive. You can see a rapid change in consumption after this whole pandemic. You can see right after everything was deemed essential, sales started to drop off. So right around early March, you saw sales spike as everyone went to go hoard cannabis. And then once it was deemed essential, sales plummeted, especially in Nevada, where I think it's 80% of all sales are sold in Clark County, where Vegas is at. And with everything shut down, tourism is highly impacting sales down there, followed by Colorado. Obviously, maybe not obvious. It wasn't obvious to me. I didn't realize how impacted Colorado's economy is to tourism. Washington is really surprising. I've always said Washington is a petri dish experiment shithole to this industry. It's terrible. We don't have vertical integration, so you can't own a rec shop if you are a producer and or processor, and it's incredibly competitive. You can't advertise a lot of the times. You can't have outside investors. It's crazy. And yet we saw sales pretty much level out. Washington probably has the most normalized sales out there. And so for somebody that's looking for normal sales during an absolute economic crisis, I think Washington should actually be considered. Whereas normally I'd say just don't even bother doing business here. And you can see that when we separate Washington from everything else, you saw the same panic buying in the beginning, leveled off when we got to essential business. And then it kind of just moved around until 420 when you got that spike, and then it crashed down again. But all in all, it's a pretty decent line. We talked about how Nevada's seeing crazy crashes down there. I'm not sure that a lot of those companies are going to be able to survive. Daily sales growth trends are changing in Washington. We're seeing a lot of the spikes right at around 313 when there was initial declaration of stay at home. People wanted to make sure that they had cannabis before it was declared essential. When the final stay at home orders were made in 321, there was another spike. Then we saw a 420 spike, which is the highest one. But what's interesting is this year people tried to go earlier. Maybe that was for social distancing. Maybe that was because people were offering deals the entire week beforehand, but we did see an initial spike. And what's interesting, a little bit of a change from the norm, is people are going during the day now. So Friday between the hours of 3 and 5 always saw a huge spike. It was the biggest day, especially for edibles. And so with this new trend, we're starting to see that people are going during the week. Now, I'm not for certain, but I think less people are going to the store, but they're buying more. So sales were driven by larger baskets. So even as year over year and even month over month sales are declining, it tells me a lot more people aren't going. Those that are going less frequently and buying more. So this graph is looking at where people are buying CBD, noting that stagnant chain brick and mortar stores are limiting consumers' awareness of CBD. Food grocery stores are hardly selling at all. Drugstores have increased a little bit after CVS rolls out CBD to 800 locations. But after the FDA warns about Curaleaf, you saw it completely flatten out from convenience stores and even dipping down. All major brick and mortar channels have shown significant dollar sale declines. This could be because of that FDA warning. It could be because of the vaping deaths. It could be because people are staying at home and not driving around. They might not be working. And if you're not working, you're not in pain or you're not in anxiety going to work. There's all kinds of different reasons. So we're going to have to speculate behind that consumer purchasing behavior. So another graph on the impact on CBD and regular FDC channels. And as I mentioned earlier, in-store transactions has shifted to earlier hours. So some of the hours that people were going after work, obviously they don't have to worry about that. Maybe they go on their lunch break or whenever they want. Before the stay at home, everything was predictable in terms of when people were going to be going to the store. Now it's all over the place. We are seeing, though, that most people are going during the week instead of the weekend. Back in March, we saw a lot of people shifting to Mondays and Tuesdays, getting their week on early. But recently, things are starting to settle out a little bit more, becoming more normalized. Friday is back, reigning supreme in sales. 20% of all sales fall on a Friday. Maybe no surprise to anybody, Generation Z has been purchasing a lot more, but not all categories have fared the same. Pre-rolls are down. Obviously, you can't puff, pass. The highest demographic for pre-rolls were white women 50 and older. So maybe they're not using cannabis. Maybe they don't need to. Not really sure. But we do know is a lot more people are eating edibles. So edibles have grown while topicals fell. Again, we mentioned earlier that maybe because people aren't working or maybe they want something that's going to last a lot longer. They're at home, so they don't have to worry about looking weird or being paranoid. It's not just THC. CBD edibles have also seen similar trends. So what's interesting about all of this is you see a town in northern France banning alcohol and saying it's because of kids. They don't want parents being drunk around their children. Greenland banned it entirely for the same reason. They said child abuse happens a lot more with alcohol. So CBD may be this gateway for places like northern France or Greenland to open up CBD and eventually THC. A lot more patients are talking to their physicians about CBD. We just did an episode about mental health, and so 79% are using it. And I know that right now there's a lot of people with uncertainty really stressing out. It's not just jobs and politics and racial tensions, but it's just the ultimate uncertainty about the U.S. government and the dollar and the economy and everything. Not just health, but finance and everything we've all worked for. So it's a big deal. And using THC for mental health goes across the entire board. It's not just certain ages, races, but lifestyles and behaviors. Everyone is using it from all types of socioeconomic statuses. Ultimately, this disruption is going to change the way that consumers buy. And so the entire consumer buying pattern is going to shift. Long term, there may be negative impacts on shareable formats like pre-rolls. Short term, might have federal and state cannabis legalization put on the back burner. I know that the project I'm working on to legalize cannabis marijuana lounges in Washington state is going to be kicked down at least a year. Long term, that may accelerate more favorable legislation. I would expect a fast track for delivery, for example. Washington State doesn't have delivery. For hemp CBD resiliency, seen as a consumer embraces it, there may be long-term implications until the federal government actually posts some FDA guidelines. All right, so let's take a look at how Americans' shopping habits have changed. We said that edibles are increasing, and interesting enough, it's comfort foods as well. Americans are buying a lot more baked goods than ever before. And you can see that from baking mixes and dough and on jellies and all of these things increasing anywhere from 78 to 100%. So all of these chocolate chips doubling in sales. People are looking for comfort foods. People are looking for edibles. So one interesting thing to note is that 73% of the people surveyed said that they were ordering groceries online for delivery more frequently, or at least making fewer trips to the store. I know I started using online delivery just because it was annoying. I noticed about a year and a half ago, a lot of the grocery stores literally cut their tellers in half. There were 14 teller stations and only 7 were on. It was every other one. And it seemed to happen like all at once, where Fred Meyer or Kroger, wherever you're at, as well as Safeway kind of did it at the same time. So I just found it frustrating and ended up doing delivery, which was nice. And then now that everyone else is doing it, this tends to be a lot longer wait, but it is an interesting shopping habit change. An astounding 88% said they were unable to find certain items they normally buy. I would agree with that. And silly stuff too, like mayonnaise. Every time I want to buy something, it says it's unavailable. So either the website is not accurate, which is highly possible, that they just don't have very good inventory tracking, or just things just aren't readily available. It could be because people are buying in bulk. So almost half of the people surveyed said that they are now buying more than they were before, and 89% believe the stores should place limits on those items. Half of the survey respondents said that they had witnessed price gouging, and 48% believed that they had personally experienced it. And during an era where brand preference are impressed on shoppers at near unconscious levels, the survey found that not only did brand loyalty evaporate, but shoppers have become so desperate and afraid of shortages that they might be waiting around for the next aisle, that they've been buying whatever is available regardless of price. So to sum it up, Americans have gotten a lot more cautious about shopping since the beginning of this crisis, and would be curious to see if anything has changed should a follow-up survey ever emerge. So taking a look at how consumers are spending differently, you can see that 70% of US GDP was driven by personal consumption. In the first and second quarter of 2020, the pandemic has initiated transformation of consumer spending trends as we know them. As of May 12th, combined spending in all categories dropped almost 30% year over year. In particular, spending on groceries reached a year over year increase of 97%. General merchandise and groceries saw a sharp spike in initial spending. In particular, spending on groceries reached a year over year increase of 97%. With less foot traffic in malls and entire stores forced to close, sales of apparels plummeted both in physical locations and over e-commerce platforms. I know I've ordered jeans a few times and it's a pain in the ass. You have to send it back, and sending it back is terrible. You have to actually go to like the post office or whatever. You can't just throw it in the mail. So they've got to figure that out, because that's just not working. The food and beverage industry has been hard hit. There's a lot of businesses that have turned to delivery to try and stay afloat, but alcohol was a huge amount of those sales. So the food kind of helped to break even. So unless the landlords are going to reduce rents, 25% minimum will not come back. So we saw a shift which resulted in spiraling 88% of sales declining. Meanwhile, a lot of consumers have shifted away from eating out to home cooking. So as a result, grocery store delivery services jumped by over fivefold, with consumers spending a whopping 558% more in April compared to last year. Food delivery services are high in demand with DoorDash. So we're going to get into some apps and how people are looking at which apps are changing and using. But first, looking at travel. All travel categories experienced an immense decline. Cruises suffered the worst blow by far, down 87% year over year. Airlines have also come to a halt, nosediving 91.5% in a 10-week span. So we're briefly going to look at which apps are either growing or slowing in popularity in North America based on a number of active users and downloads. Starting with the slowdown in hospitality and travel, Airbnb is absolutely getting decimated. Real estate, Zillow, you name it, nobody's looking at buying, moving Actually, if you want to rent a new place, you have to be able to do it sight unseen. Now you can look at the 3D video rendering, but if you end up putting the first, last, and deposit down, you see it and you don't like it, they'll give you your money back except the deposit. So it's incredibly difficult. So there's not going to be a whole lot of people moving around and looking at those types of apps versus social media and food delivery. Those have seen a substantial growth versus an explosion from Netflix and media entertainment. Online shopping, as well as video chat and conference calls like Zoom, has seen a huge increase. Instacart, which a lot of grocery stores have seen, have had a 650% increase in new users between March and April. Netflix saw an increase of 20% in downloads during the same time. And the health management app saw a #1 medical app in the US and #8 in the Google Play Store. So my chart, that somebody wants to have their own access to their records. Apparently, healthcare is important now too, with mental health and everything else. So interesting to see where people are going, how they're responding. But to see what they're going to do, you're going to have to come back to the Talking Hedge and find out. So with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.